Hi, I'm Mal from the Money Study, bringing you another episode of the Ultimate PSS Education Series. We're up to number 38, and this one is all about PSS and how it relates if you are looking to get a Centrelink Age Pension. Before we go through the details, it's my disclaimer. It's facts, it's figures, it's information only. It is not advice in today's session. So I get a lot of my clients who suggest to me that they'll never get an age pension from Centrelink because they've got a PSS pension. Now, they may or they may not get an age pension because it just literally comes down to the normal tests that Centrelink apply, an incomes test and assets test to their overall situation. So just because you've got a PSS pension doesn't preclude you from getting age pension. It just depends on how big is your PSS pension, whether we get a Centrelink age pension or not. You see, a PSS pension doesn't even have an asset value. It can't be cashed in, so there is no asset to it. If you've got a pension, there's no asset value because literally you have cashed it in. Sorry, you can't cash it in. And so all we really got to look at is the income. And even the income, the full income from your PSS, we're talking about your gross income from PSS, is not an assessable income, all of it, literally because we've got a tax-free component. And so what they say is CSS will say they will not include the tax-free component in it. But it depends on how big your tax-free component is. They cap this at 10%. So if your tax-free was only 7%, yes, you'd get the full 7%, not included in the income. If you had a tax-free of 15%, then only 10% is what they would actually subtract from that income. So if we're looking at a gross pension of say $50,000, 10% of that is $5,000, hence only $45,000 would become accessible for Centrelink purposes. So can we get this pension at age 67, which is the age you need to be to get a age pension? Well, we'll do some examples, but remember that you can anything to do with Centrelink is always taken as a couple. So if you've got a partner of any age, doesn't matter whether they're 30 or 90, what are they earning? Everything is combined as far as incomes and assets test for age pension if you've got a couple. So where does it cut off? Basically, as a couple, $95,336.80 you could earn in income per annum before you would not be entitled to any age pension. Still pretty generous, and $62,000 there for a single person. So you could earn, as a couple, up to $95,000. If you earn less than that, you in theory would be entitled to some Centrelink age pension at 67 and beyond. There is an assets test because the PSS doesn't apply to that, but yes, all of your other assets do. So if you've got investment properties, share portfolios, other investments, money in bank accounts, your partner's superannuation in a normal accumulated fund, anything that's what we call liquid assets, financial assets, and so forth, they are also included in this assets test along with some deemed assets, which I'll show you in a sec. But what it comes down to is you can actually have here, if you own your own home, over $1 million. You can have over $1 million in assets, not including your own home. You could have your house worth $3 million, and providing you got less than $1 million in assets, you still could get some age pension. So let's have a look at an example. Oh, sorry, before we do the example, this is what you would actually get paid here if you've got a full Centrelink age pension. So as a couple there, $1,650 a fortnight if your assets and incomes were under the tests, which is roughly $43,000 a year. So now let's look at an example, and I'm just using an age pension calculator that I found on the internet, and you punch in there the details. Now I'm using the example of a couple who own their own home. Okay, a couple who own their own home. And then first of all, it says there, what is the value of your non-financial assets? Now this is things like the contents of your house, your car, your boat, your caravan, all sort of major assets in that regard. But it is fire sale value, effectively. What would you get if you put all the contents of your fridge and so forth out on the street and you had to sell them this afternoon? So obviously it's a very, very discounted level. It's not what you've got your house contents insured for. That's new value. No, this is what you'd get for them if you had to sell it all at the same time. So, contents of your house really, fire sale, might only be worth $15,000 or $20,000. So I've got their non-financial assets of 40,000. They've got 100 grand either in bank accounts or some sort of investment or something, and total assets then of 140,000. What Centrelink do is they deem that to actually earn an income. So they don't say that the 100,000 earns $5,000, $6,000, $7,000. They deem it to earn a fixed rate. The deeming rate is quite low at the moment, and it's showing you there that $140,000 in theory only deemed to actually earn $1,276 a year from those investments. Then we've got our PSS. We've got no other employment, neither the member or the partner are working, so there's no employment income, but we do have this income coming from the PSS. Now we've assumed a gross PSS pension of say $60,000. 10% of $60,000 is not included, so that's a $54,000 assessable for other income for Centrelink age pension requirements against the incomes test. So we've got $54,000 worth of income added to the $1,276 of deeming income. A total income there of $55,276 is what Centrelink are going to look at. You hit the button to get it to calculate, and it comes back and tells us that this couple would indeed get $20,543 a year from Centrelink on top of their other income. So if you take the $60,000 gross pension that they're getting from PSS, they're going to get, let's hope, $6,000 from their $100,000 invested, say, in another super fund at 6% or something like that. And of course, they get the $20,543 from the age pension from Centrelink. So this gives them a total income in their retirement here of $86,543 a year. Yep. Not too bad, not too bad. When you consider that the Australian standard for a comfortable lifestyle for a couple owning their own home with no debt is around about 70,000. I'll be talking about that in another session. So, stick with me for further sessions. If you want to come and have a chat and see how Centrelink applies to you, then I certainly suggest in this case you book your appointment with Ashley. He's a walking encyclopedia on anything to do with Centrelink, and he's also a walking encyclopedia on aged care if you're in that situation. Anyway, book an appointment and we can go through some numbers and help you understand how the two things would come together. Thank you.